So we'll start from this problem. So this problem discusses about sales variance, and this question was asked in June 2020. First, let's read the requirement and then we'll start the answering it. So the requirement is like very small. Okay, visibility, I'll just zoom it. So they're asking, calculate the total variance for clear course lens treatments. Okay, so first one they are asking you is sales mix contribution variance, and the other one is sales quantity contribution variance. Okay, so it's SMV and SQV, and then they ask you explain what each of the sales mix and variance contribution variance and the sales quantity contribution variance measures. Okay, so this is just a straightforward meaning of it. So meaning, I think we have discussed it already. Using your answer from part A, so from here, and any other relevant calculations. So if you want any calculations, you can do additional calculations if necessary. Discuss clear course sales performance for the year just ended. Okay. So they are also saying, note there are up to 4 marks available for additional calculation. So for this additional calculation, 4 marks is reserved calculations relevant to sales performance and 6 marks for discussion. So out of this 10, 4 is for additional calculation of some numbers, and the balance 6 mark is for a discussion purpose they have reserved. Okay, so first we'll start from these two variances and then we'll move on to the discussion part. So first we'll start from the question here. So Clearco is an eye treatment specialist founded in 2014, which runs 5 clinics nationwide. It is based in Zealand, a country in which 20% of the population is over 65 years old. Okay, so that is a chunk of old people compared to only 15% 10 years ago. So in the last 10 years, okay, the percentage of people who are becoming older, who are old, are actually gone up. So that means sales can go up. The total sales can go up because old population are higher. So let's see. Clearco offers 2 eye treatments, laser treatment and lens treatment. Laser treatment is the less complex of the two procedures. Technology changes rapidly in this industry, and as a result, 90% of patients now qualify for laser treatment compared to only 80% 5 years ago. So again, if you see, I think if there's a laser treatment mix would be going higher, because the technology has evolved and 90% of people now are using it. So the percentage of old people is also going up. The percentage of people who are taking the new laser treatment is also going up. The remaining 10% of patients are only able to have lens treatment. Okay, that the balance part, the small balance out of this 90, the balance 10% are can have only lens treatment, of which there are two types: refractive lens exchange and implantable contact lenses. Clearco started providing RLE, a treatment most effective for patients aged 40 or older, in 2014 when it was founded. 2 years ago, it also began ICL, a treatment recommended for patients under the age of 40. Okay, so they are also doing like two treatments here out of this 10% patients. Okay, they are doing two types of treatment. So one is for older people and the other one is for younger set of people. So let's see what he is again giving information. The market for eye treatment procedures in Zealand is dominated by a few main suppliers, of which Clearco is one. Until 2 years ago, Clearco was the largest supplier, but following the merger of two other companies, it is now the second largest. So they have dropped in the status. They are not the number one company, they have become the number two. The merged entity EOS Co has recently released its financial statements for the year, showing profits which were 10% higher than forecast. So that company seems to be like really doing well. EOS press release stated that it has achieved this despite offering reduced prices for the ICL treatment. So their prices are lower, and because of that, their profits are higher. So it means that they have reduced the price. I think sales also would have gone higher. So new customers would have also gone there. Okay, so for our company, sales would have become actually lower because of our competitor. it has been able to offer reduced prices because of the economies of scale achieved by the merger. So, see, overall, I think the sales would be down because of the competitor. He is offering a lower price, so people will go to him. Okay, but at the same time, you should also consider that the total population, world population, is also going up. Okay, and we don't know what kind of treatment he is giving. Okay, so whether he is giving which treatment is not available. Okay, whether it's like laser treatment or RLE or ICL, that and all is not at all clear in this question. But either way, this is the information they have given. The following information relates to the two types of lens treatments offered by Clearco for the year ended, for the year just ended. Okay, a lens treatment, RLE is there, ICL is there, two products are there. Budget number, actual number are there. Again, budget, actual is there. Number of treatments are also given. Selling price per treatment is also given. Variable cost per treatment, variable cost for the treatment is also given here. Okay, they have given all the numbers they have given. Okay, so let's start working the sales mix variance and sales quantity variance. Okay, so at the outset itself, they have told us that it is going to be marginal. Sorry, it's going to be marginal. So we can remove the absorption part of things. Okay, we don't want absorption. We'll just need marginal. So we just need these numbers and we can move on. So standard contribution is actually equal to selling price minus variable cost. So that leads to standard contribution. Right, that's it. So let's get the selling price. See, what selling price? It's a standard. Okay, it's a standard. That's why we put it as standard contribution. Okay, so standard selling price is 3000 and standard variable cost is 600. Here we have standard selling price is 3650 and standard variable cost is 1050. So let's get the standard contribution. Okay, so that we got. Now, so this is represented in terms of dollars. Okay, next is actual quantity. We need this numbers. Okay, because for our formula is, okay, our formula is here. Our formula is sales mix variance equals to standard contribution into RSQ minus AQ. So we have to first get the AQs. Let's see. So first, I think to get standard contribution we have to now get RSQ. So RSQ formula is this. Okay, RSQ formula is this. So hope you guys, I think you remember. TAQ by TSQ into SQI. So to find out this, first we have to get TAQ. For TAQ, we have to get AQs. So AQ is actual quantity. Actual quantity is 4130 and 960. So SQ is budgeted quantity. So that is 3750 and 1320. Okay, so we got that number. So we can easily find out TAQ by TSQ into SQI. Okay, TAQ is 5090 divided by 5070 into SQI. SQI is the individual one, so it is 3750. Okay, so we got our RSQ we got. So let's get this number. So this number is standard contribution into RSQ minus AQ. AQ is 4130, and again standard contribution into RSQ AQ. AQ is 960. So answer is 36520. So it is a positive number. Let's check whether it's positive, favorable, or adverse. They should have sold 1325, but they have sold 960. So that is a really bad thing. Okay, they have done something really bad. So it is adverse here. So favorable. So this is over. Comment and all we'll see later. So let's go to the TAQ, TSQ. Sorry, let's go to sales quantity variance. So sales quantity variance formula is this: weighted average standard contribution into TSQ minus TAQ. So first let's get the easiest ones. The easiest ones are TAQ and the TSQ parts. So that we can directly get it from here. So that we have to get weighted average standard contribution. So to get that, first we need standard contribution. Then we need standard units. So we have to get the budgeted units. Budgeted units is for RLE it is I think we can directly take TSQs. Okay, SQ items. We don't need to keep checking it. Okay, we'll get the contribution. Okay, so total contribution is here. And total standard units is here. So when we divide both, when we divide 1 2 3 1 2 1 2 1 5 0 7 0, we'll get the answer. So let's get the answer. Okay, so the weighted average standard contribution is 2426. So we have to get that number and we have to put in the formula. So the formula is weighted average standard contribution into TSQ minus TAQ so we can get the answer. So our consideration whether it is positive or it's favorable or adverse, they should have sold 5070, but they have sold 5090, so that is favorable. Okay, so with this answer we have completed these ones. Okay, so sales mix contribution variance is over, sales quantity contribution variance is also over. So the only thing which is remaining is using your answer from part A. So this is the answer from part A, and any other relevant calculations. Okay, discuss clear core sales performance for the year just ended. So they are asking for 4 marks of calculation and 6 marks of discussion. So at least some 2 calculations we have to do. So what are the 2 calculations we could do here? Okay, see the 2 calculations that you could maximum do. Okay, the 2 calculations which we could maximum do are sales price variance. I think that's what we can maximum do. So we can get those numbers and we can apply it. So just wait, we'll get the numbers. So we can find out this. So one is sales price variance we can try. And sales volume variance we can try. So both we can try and we'll see the answer. So sales variances AQ, SP and DAP. We have to do it for separately for both. So let's get the number. So RLE, so we have it here. We'll get the table here and we'll do it. So our table is, just look at the table. So table is, we need AQ, actual quantity of RLE is 4130 into standard price. So SP is 3000 minus AP is 2900. See, we got that. Let's get for ICL. ICL standard price is actual price is 3000. Actual quantity we need, right? Actual quantity for ICL is 960 into SP. Standard price is 3650. Actual price is 2900. Sorry, actual price is 3400. Let's get the answer and let's get the total. So also let's do for the volume variance. So volume variance is standard contribution Standard contribution, I think we already have it, so we'll copy it from the top. This is standard contribution. So standard contribution into SQ, standard quantity. Standard quantity is 3750 minus actual quantity. Actual quantity is 4130. Here standard quantity for ICL is 1320 minus actual quantity is 960. So let's get both the totals. So is this favorable or adverse? So let's look at it. They should have sold at a price of 3650. They have given a discount of 3000. It is a lower price they have given, so it is actually adverse. Actually all are adverse. And in terms of volume, this is a negative number, so we'll check with this. They should have sold this much, they have sold higher. Okay, they have sold higher, so it is favorable. Overall also it is favorable, and this one alone is adverse. Okay, so whether the volume variance is right or not, okay, we can also check it in another way. We can check it in another way. We can just do that. We can just find sales mix variance plus sales quantity variance. When we add both, we'll have to get the same answer. So this number as this is favorable, we'll remove the minus symbol, and we have one more. As is adverse, we'll put a negative symbol. As is adverse, we'll put a negative symbol. Okay, so when you add both these numbers, the number should come to here it is favorable. So this is a favorable number, this is adverse number, so the overall number is a favorable number. Okay, it's a favorable number. Now our consideration is, what is the interpretation or comment? Okay, what is the interpretation or comment? Okay, so we'll start. So let's copy the question and place it in its own place. So we'll get the comment from here. Okay, adverse variance. Okay, sorry, sales mix variance. From there we'll try to get a comment. So what does this say? sales mix variance tells whether we are moving away from the proportion or not. Okay, and are we selling the higher contribution item or not? Okay, so the higher contribution an item is ICL. Okay, but are we selling more of ICL? No. So we can put like this: the company, or what is this? The hospital, or what is it? It's a company only. Okay, the company sells less of the more higher product. Okay, which is a ICL, and sells more of the lower contribution product RLE. Okay, so this seems to be very clear in the sales mix variance. Okay, that's why if you see the lower contribution item, they are selling more and they are getting a good favorable variance, but the higher priced one, they are unable to sell it, and that is, I think that might be due to the competition. This might be due to the lower selling price charged by the competitor. Okay, so this can be the concept. So we'll just so first point we have got it. I think point we'll note it here. Okay, let's go to the sales quantity variance and see what is the idea we get there. Sales quantity variance. Sales quantity variance is here. We'll get the idea here. So in sales quantity variance, it indicates that it is favorable. That is, overall they are selling more. Okay, how much more they are selling? See, it's not too much and all. Only 20 units they are seem to be like selling more. Okay, so the sales quantity variance indicates that the company sells more units than the budget. This has resulted in favorable variance. Okay, but it's not such a great achievement, because like only 20 units they have sold higher. Okay, so that also we will note. Only 20 units have been sold additionally to budget. So that's not some kind of a great achievement or anything. So that's about that variance. Let's look at the sales price variance and see what happens there. In terms of price variance, it is adverse. Then it means that they are reducing the price. And which one they are reducing? I think in both the variances are adverse. Individually, both variances are adverse. It means in both areas they are reducing the price. Okay, so they are reducing the price in RLE product as well as the ICL product here. So here they have reduced by $100, and here they have reduced it by $250. Okay, so I can put like this: the company has reduced the selling price, and this has resulted in individual and total sales price variance. Let's look at the contribution variance. Volume variance itself, you'll see once more. So if you see, in terms of volume, okay, again it indicates the same thing. RLE has been like sold more. Okay, they have sold more RLE, and they have sold less of ICL. So that's what we got the same idea, I think, above also. Once again, we'll just check. Right, so RLE they are selling more, and ICL they are selling less. So that's what again is visible in this also, volume variance also. So we don't need to put it again and show it, but we can put the overall picture. So overall, the company is severely affected by the competition in terms of price and volume sold. Okay, so they wanted 6 marks for calculation. I think calculation 6 marks we will get here. Price variance and volume variance. We also showed the proof of it. And we also got the comments. So we have to get 6 comments. I think 4 comments we have to get. We got, let's check the marks here. Okay, we have to get 4 calculation marks. I think that we'll get. And 6 marks is reserved for discussion. So we have got only 4 points. We have to get 2 more points, and we have to get it from these paragraphs only here. So how can we get those additional points is, we can put it like this: laser treatment information is not available, but it is important to get that information, as the laser treatment. Okay, I think laser treatment, they say that 90% of the total laser customers, see, 90% of the patients now qualify for the latest laser treatment. So only the remaining 10% are using this. So we are only like thinking about the 10%. We are not even thinking about the 90%. As the laser treatment is offered to 90% of customers, so that we are not at all thinking. So that is the information that we actually have to get, because that's the crux of the problem. And 6, the overall performance can be effectively judged only when we have the performance of laser, RLE, ICEL. Okay, so I think we'll end it there. So unless we have these information, we cannot proceed the performance, we cannot analyze. So that's where we have to end it. So we got the idea here. So we got the overall idea here. So, and that's about the sum here. This is a 20-mark sum. It will take you a lot of time. Typically, it should take you, for reading and for writing this question, it should take 36 minutes or 35 minutes. And you have to plan accordingly. So once you read itself, you have to think like what are the various formulas that will come up, and then you only have to work out this answer. Okay. So that's about this question. We'll end this question and we'll move on to the next one. Thank you.